Welcome, income hackers. This is your host, Ryan G. Wright. This podcast is for individuals and families who are interested in fast tracking their financial success. You'll hear experts discussing topics like generating a residual cash flow, building wealth through real estate, financial literacy, creating a family legacy, and overcoming your fears. If you get value out of this podcast, please subscribe, rate, and review the podcast. It's a big help to me. All right, income hackers, welcome back. Thanks for being with us. Today, I've got a good friend of mine, Andy McFarland. Andy launched Figure Flipping Mastermind with his friend Justin Williams back in 2016. He's got a passion for education, and he loves to help inspire people and other current leaders to be successful. He began mentoring with I Love Real Estate Projects in 2014. Since 2001, he's bought and sold over 1,500 properties. He owns Enlightened Home Buyers, which purchases over 200 homes per year in Utah, New Mexico, and Indiana. He owns rental properties in multiple states, apartment complex storage units. He lives in Utah with his amazing wife and their 4 children. Welcome, my good friend of the program, Andy. Thanks for being here, man.
Oh, my goodness. Thank you for having me, Ryan.
That bio is amazing.
I know, right? Like, who wrote that thing?
It's fantastic.
Here's the deal.
It's true, though. It's all true. I know it.
Yeah, it is true. Here's the thing that the income hackers don't know. I'm probably one of the guests that if you gave me opportunity, I could flip this around and probably do more and share more about you than almost any other guest could.
That is very true. I've known Andy for how many years has it been? 15?
No, at least 15 years because before we got married, my wife and I, we were sitting on your boat with you and Hillary, and we were talking about stuff. So it's been 15, 16 years now.
It's been a long time. So it's probably 17. How long have you guys been married?
17. It'll be 15 years in October.
Yeah, it's got to be like 16. Well, we knew each other before. It's probably been 16, 17 years.
Long time.
Yeah, it's a
long
long
time. I know
time.
a lot about this guy. I know a lot about Mr. Ryan Wright.
If you want Andy to come on and talk about, if you want Andy to come in and talk about me, put it in the comments. We'll see if we can convince him.
What you guys can't see here is that Ryan's sweating because he's like, this is true. He knows more about me than other guys.
I wouldn't sweat at all.
The hot seat. Hot seat.
Well, Andy, so I know you guys have Flip Hacking Live coming up. We're going to talk about that a little bit later. But the big thing in this show we want to talk about is just wholesaling. I mean, you've done 1,500 wholesale properties, about 200 per year in multiple states. A lot of people listening want to be income hackers are saying wholesaling looks like a good way to do this. What is wholesaling? What is it about? How would somebody get started? Let's kind of break this down for a minute.
Yeah, and here's the thing too with wholesaling. A lot of people preach and teach wholesaling as like the easy way to get started in real estate. You've got no money, no commitment, no nothing. You can get in and make a gazillion dollars. And I would say that's not true. We can dive into wholesaling and see exactly what it is. But I think wholesaling it's kind of like a sophisticated way. I mean, certainly you can do it, and it seems like there's not a lot of money, but it's a sophisticated way of being able to finding motivated sellers and linking them up with motivated buyers. Trying to find a discount from a motivated seller, which is not easy all the time. So you got to find a constant stream of them, and then also finding buyers that are willing to pay you for what you found, right? And do that quickly and pay cash for it and everything. So it's kind of it's a simple strategy, but it's hard. It's an advanced thing, right? There's a lot of moving parts to it that people don't think about. But yeah, what is wholesaling in its simplest form? You're finding something at a property at a discount, and then you're turning around and selling that property to somebody else at less than a full market value. So somebody that's going to fix it up and maybe sell it retail. People think HGTV, make it all pretty, and then sell it to Tom and Susie homeowner. They're going to move in, right? So my clients primarily are people that are going to fix up that property and sell it retail, or they're going to keep it as a rental property and cash flow it.
So when you say it's a little more advanced, what are some of those advanced things that someone getting started is not going to know about? Because it just seems really easy, right? I'm going to find somebody that wants to sell a house. I'm going to buy it for $50,000. I'll sell it to somebody for $60,000. I make $10,000. Pretty simple. What are some of those advanced things that people aren't thinking about?
Totally. It's such an easy concept for people to understand. It blows their mind when they hear it the first time. They're like, wait, I can go sign a contract with somebody for 50 grand and find somebody that's going to pay me 60 grand for it. I'll make $10,000. That is absolutely true. Here's the little dirty details here, right? How do you find the guy that's willing to sell you this property at the deeper discount you can sell for something? Sell it at a wholesale value to somebody else, that then they're going to have their margin to be able to sell it, take it retail and actually make some money. And that what that is today, it's not like it was, different markets cycle, right? But today what that is it's an extremely competitive market. There's a lot of people that are looking to do things. So what you've got to have is a steady stream of leads that then you can work and try to turn into contracts, right? Steady stream of leads. So how do you get that? That's the key thing. And the key thing with that is marketing. So in today's market, it's just, how do you find leads of motivated sellers and houses that just need work? So
yeah. I think it's a great point. One of the things we talk about quite a bit here on Income Hacker, you're going to have one of two problems always. It's either going to be easy to find properties but hard to sell them, or it's going to be hard to find properties and easy to sell them. And I think right now we're having a hard time finding great deals, and it's really easy to liquidate them. And sometimes it's the reverse. You can find them really easy, but you're gonna have a hard time getting rid of them, or liquidating them is probably the better way to say that. What's your thoughts on where we're at in the market right now? What's your thoughts on that overall principle?
yeah, absolutely. That overall principle is 1,000% true. That's totally true. If it's easy to find them, and they're laying all over the place. Nobody wants those, right? They're not going to pay you the maximum for it when you're selling to somebody. You're absolutely right. But right now where we're at, I mean, I'm in 3 different markets in the country, but I got a pretty good pulse on what's going on in the rest of the country from a bunch of friends and other mastermind members that are around the country. And it's a pretty hot, competitive market in most places in the United States right now. And even, parts of Canada and stuff, people I know. It's a pretty hot market right now, which means it's harder to find those. It's harder to find those motivated sellers and those deeper discounted properties without sifting through a lot of stuff. So where are we at? It's a low inventory. So which creates, supply demand, right? Basic economics. You've got high demand and low supply, and it's going to drive prices up. So that's where we're at currently in the market. And recently, we're dealing with this global pandemic, which is causing just weirdness in the markets. But in the real estate market, it's caused us to have historic low 30-year interest rates. So with historic low 30-year interest rates, people aren't paying cash for houses. People that are Tom and Susie homeowner, they're moving to this, they're buying a payment, right? So they don't care what the house is selling for necessarily. They're saying, what's my monthly payment? And with an interest rate that's now 2.75% for a 30-year fix, there's almost a full point lower than it has been, it's been low for so long. They can afford more house, meaning price, because the payment's the same. So it just causes things to be even more of an explosion in real estate. So crazy.
Congratulations to Ed I. Fire. He's our week's winner for our review contest. He wrote solid content. He gets to the point and makes cash flow opportunities clear. Ed, really appreciate the kind words. And you win some free Income Hacker swag. So pick out a t-shirt, a mug, or a phone case that you want. Just head on over to incomehacker.com, click on the shop, and email us your size, preference, design, color. Just email it over to swag@incomehacker.com. Remember, Income Hackers, if I read your review live on the air, you win free swag. So head on over to iTunes and leave us a 5-star rating and a great review, and you could win next week. So let me ask you this. Do you think it's easier to getting into real estate? Let's say you're getting into real estate for the first time. Would you rather be a flipper, a wholesaler, or maybe getting into rental properties? I don't know. Maybe we shouldn't do rentals, but flipper or wholesaler, which one's easier?
If you're that's a tough question. I mean, I guess it depends on your personality. I think it's easier for people to wrap their mind around doing traditional flips, because it's like they can look at it in a spreadsheet. I'm buying it for this, I'm selling it for that, and what's it going to take in between there? And people can strap on their belt and put their hammer on, and they can go do their thing. So I think that's easier for people to conceptualize. Wholesaling is a little bit tougher for the people to conceptualize, like how do I find these people, and how do I negotiate with them? How do I sign these contracts? And then once I get this, well, now it's like a hot potato. Now who's going to buy it from me? Who actually has all this cash, right? There's a lot of moving parts to this simple concept. So I think it's traditional real estate of like buying it, fixing it, selling it. That's probably makes more sense to people. So I think, and that's where I started. I started doing that because I didn't know wholesaling. I didn't know that was a thing. In 2003, when I was starting real estate, that wasn't as much of a term that I remember being around. It wasn't much of a thing, people doing wholesaling. I just thought you buy a house, fix it, and sell it, or you buy a house, fix it, and rent it. And that's kind of the two veins that I saw. But wholesaling, of course, in the last few years has exploded, right, in popularity. So
I like that. And I want to talk about some of those first deals that you did, actually. But one of the things that you mentioned that is worth pointing out, when you're doing this wholesaling, you've got to leave some meat on the bone for the next guy, or you're never going to liquidate the property. So a really common mistake I see with newer wholesalers is they're trying to buy a property and they don't buy it good enough. And they're thinking they're going to liquidate it for full retail for a house that actually needs quite a bit of work on it, and there's no margin for the guy on the end to make some profit. So you've got to build some profit into the guy that's going to end up buying the property in the end, because he's got to make some profit when he sells the property to an end buyer, or he's got to make some margin if he's renting that property. What's kind of the model that you would say? What do you need to buy it at? If it's if the house is going to retail at 100,000, let's say, what do you got to buy it at? What do you typically sell it at? What kind of margin does the end buyer need? Let's break that down in a hypothetical situation here.
Yeah. So, and I would say this too, people want hard numbers. We can talk about some generalities of numbers and stuff there, but what it's really boiled down to is what the market will kind of bear. And I learned years ago, so if this $100,000 house and somebody's going to sell for $100,000, you look at this and say, okay, well, maybe you can go buy it for $50,000, and how much is somebody going to pay you for it? Somebody might pay you 60, somebody might pay you 70. Well, the difference is going to be, everybody's going to look at it a little bit different. Everybody's going to say, if you bring 10 people into a house and say, hey, what are you going to do to this house? All 10 of them are going to probably say very different things, different colors, different layouts, different stuff, right? And some of them are going to say, hey, I'm going to fix this up and keep this as a rental. Somebody's going to say, hey, I want to move in here. This is a great house. And somebody's going to say, I'm going to fix it. I'm going to sell this house, right? So when you're talking about what somebody's willing to pay for it, it's like, some guy might say, I'll pay 70 because I'm going to live there. And some guy might say, no way I'll pay 70. I can't make any money flipping it at 70. Well, I wasn't going to flip it, right? And the other guy's like, well, I'm going to hold it for 30 years. So it doesn't matter. I'll pay 72,000 for it, right? But by and large, if somebody's going to flip a property, I would say they want to see their way to making probably 15 to 20% of what it's going to sell for. So if they're going to sell for $100,000, they probably want to make a $15,000 profit, maybe a $20,000 profit. And those margins get squeezed as the market gets more competitive. You get people that are like, yeah, well, I'll take a $13,000 profit to flip a house that's going to sell for $100,000.
Sure, a $10,000 profit.
Yeah, they're kind of racing to the bottom to cut themselves a little bit to do that. But that said, it's not a one size fits all thing, because if that house is going to sell for $100,000, you say, well, I'll take a $15,000 profit for doing that. Well, what if you're buying the house for $10,000? You're going to have to put $60,000 worth of work into it. At that point, you're like, whoa, that's a big remodel. I mean, I'm pretty much doing this whole house. I'm not interested in that much work. Versus, hey, you're going to buy this house for 50 grand. You're going to throw 10,000 at carpet and paint. You're going to sell it after commissions. You're going to make a $20,000 lick. I mean, totally different scenarios there, right?
Risk reward.
Absolutely, risk reward's always across. It's always in play here. Yeah, and then also how the areas you're selling a house in, because you say, well, Andy said on the podcast that somebody's going to do this and sell a $100,000 house to make $15,000. Well, what if this house is in the middle of nowhere and there's not that many buyers for it, and it looks good on paper, but only one of these houses trades in that area every year, versus an area where you've got 50 of these houses that are selling every couple of months, right? So it's like, if it's a high volume area, then you can feel safer going, hey, this product is going to move, versus an area that's out there in the middle of nowhere that's like, yeah, it sells, but once a year these things sell, right? So that's part of it too. So when I look at a property and I say, like, how hot is it going to be? Is this like a median house price thing? Can somebody live in that house or rent that house or flip that house? And is there a lot of trades going on in that area? And how much repairs does it need? When you've got a house that's got multiple different options, median house price area, doesn't need a lot of work, I mean, that's going to be a hot property. That's going to be hot.
Yeah, that makes a lot of sense. So there's got to be profit all along the way. There's got to be profit for you. There's got to be profit for that end buyer. There's got to be enough money for them to do the repairs to the property, in addition to making a profit on there. Let's talk about some of your first deals. How'd you get started in real estate?
All right. So like most people, read Rich Dad Poor Dad. Mind was blown. I'd never heard of this concept before, right? Passive income. And of course, he talks a lot about real estate there. So from that, I thought, well, I got to go find real estate. So I found a property that was just a property that I had no business buying. It was in a horrible part of Salt Lake City. It was a triplex, but it was all boarded up, tons of code enforcement violations. It was illegal for the zone, illegal, non-conforming to the zoning. It was just a mess. But I was just a bright-eyed, bushy-tailed kid that had never done a project before, and all I saw was opportunity. All I saw was opportunity in this thing. So I bought that house, bought it, fixed it, sold it on owner. I bought it, fixed it, rented it out, and sold it on owner financing. So I learned a lot of different things for actually hands-on doing there, and ended up making decent money on it. First as kind of a cash flow basis, and then when my buyer cashed me out, I made a chunk of money. So that was my first property in real estate. But after I did that one, I kind of did more just other projects. And the way I stumbled upon wholesaling, I guess you'd say, before I even knew it was a thing. After I did my first project, I was just trying to find other properties, right? And I had a property I put under contract. This was a bank-owned property. It was a real estate agent. And then I was planning on renting it or planning on selling it or flipping. I don't remember. And then the agent called me one day after I was under contract. He says, hey, there's some people that contacted me that want to buy this property they want to buy this property. And I'm like, well, I don't understand. I've got this property under contract, Mr. Agent. Like, you're my agent. I'm buying this property. You know that. And he's like, yeah, I understand that. But these people have approached me. They're willing to pay you $3,000 to not buy the house. And I said, what? He's like, yeah, they want to buy it. They'll pay $3,000 more than you. They'll give you $3,000 to not buy this house, or to allow them to buy it. And that was the first I'd ever heard of now what we know as wholesaling, right? Signing a contract. So we facilitated that transaction. We made it happen. And I walked away from that closing with $3,000 and going like, wow, I didn't have to do anything. I just found this property. I put it under contract. I had plans to do all this stuff. And I got $3,000 for not having to do all those things. So that was kind of like, that whet my appetite a little bit for like, that's cool. Just find the deal. Just find the deal. And somebody else will, let somebody else do all that stuff, right? So that's kind of how I stumbled into wholesaling.
That's awesome. That's awesome. Let's talk for a minute. What would you say is your first income hack?
You know what? My first, like going way back?
Sure, anytime.
Way back. Okay, let's take it way back. I think I've always had a little bit of an entrepreneur flair. My dad was in the military, so I grew up all across the United States. And when I lived in Virginia years ago, I was probably 8 years old. I don't know if it's a hack as much, but I would draw like Mario and Luigi and stuff, and I would sell them on the bus, posters, bookmarks, just like custom drawings, right? Which were not good, really, but people would pay me for that stuff. So I sold some art. But an income hack, I'd say a couple years older than that, I was probably 10 years old. I was a paper boy for the Watertown Daily Times in New York. And I did this paper route. I had the contract to do the paper route. I mean, they gave me the papers. I delivered the papers and I collected from my customers, right? So I had my own little business, mini business, because I was the guy that had that like mini contract, right? Now looking back on it. So I realized that I didn't want to do that all the time, because some days you're a kid, you're 10 years old, you're kind of lazy, you don't want to go do this stuff. So I had a neighbor who really, he was fascinated by my paper route because he didn't have a job. We're 10-year-olds, right? And he said, hey, can I help you with the paper route? So I was like, sure. I said, look, I figured out how much money I made delivering each paper every day. So I would sublet it to him, and I would pay him less per day than I was making per day. I don't remember the exact numbers, but I thought it was pretty slick. I thought, wow, they're delivering the papers to my house. I'm allowing him to deliver them. And then I didn't have to do the work that day, but because I had the contract to do it with the Watertown Daily Times, I was the one that actually got paid, and I could kind of do whatever split off I wanted with him. So subletting my paper route to somebody else, to a 10-year-old kid.
There's so much to break down in that, because one, I'm thinking like, what am I having my 10-year-old son do right now to learn some of these principles? So that's one thing that's going in my mind. But the second thing is this idea of this risk reward, right? Like you were responsible for the paper route. If it didn't happen, you were going to be the one getting yelled at or called. But then again, if you could leverage yourself and get somebody to responsibly do that and oversee that, there was money to be had there for you without having to do the labor. So it's this whole principle of leverage. How can we leverage ourselves? Which is really what we're doing with real estate. It's really what we're doing with creating a business. It's really what we're doing with income hacking, is this whole principle of leverage, which brings in an element of risk, but also brings in an element of reward. So it's how can we manage both of those? But I love the leverage. I love this Tom Sawyer, get everybody else to paint the fence posts, right?
Yeah, and there's two types, right? We all learn about like money makes money, right? Interest income and stuff, and that's true. But also other people's money can make you money. Other people's time, right? It's not leveraging other people's time, because a lot of times people think they go out there and they work for themselves and they make their time turns into money, and how much can my time be worth per hour? But what if you could make you can make a spread on other people's time, right? That's the key. And then as a 10-year-old kid, I'm not thinking that. There was not some principle or concept I was in. It just clicked for me. I was like, oh yeah, he wants to do that. It's good for him. It's his opportunity. And I have this little contract. Let's do this, right? And I made money on it. I didn't know what it was called. I didn't talk subletting. I was just like, hey, it worked. I thought it was pretty slick.
Introducing the Investor's Edge real estate investing software for fix and flip pros. Target the most profitable deals in your area with ease, and start capitalizing on opportunities you didn't even know existed. This simple-to-use software will make it easy to find properties for your flip and fix business, so you can focus on what you do best. Call 801-921-8751 after this podcast to get set up on a free trial.
That's great. I can't believe how many times people talk about Rich Dad, Poor Dad as the book that really gave them a major change. It's remarkable to me how many lives that book has impacted.
Right. And it's not like it's this, I mean, it's not the best
It's not a
book in
great
the
book.
world.
Yeah,
No, but it's the concept. Like, had nobody else written that concept of like passive income before? Certainly somebody had, but maybe it just didn't get in a story form. I don't know.
Yeah.
But I remember I was 22 years old. I was playing basketball, and some guy that I'd never met before was down there playing basketball. And he asked me, "Do you like to read?" I said, "Yeah." He said, "You should read a book called Rich Dad Poor Dad." I remember thinking, this is the weirdest sounding title I've ever heard in my life. But for whatever reason, I'm like, okay. And I read it. And I was like, what? And I went and told my parents. I'm 22 years old. I walked to my parents. I'm like, I'm living with my parents at the time. I'm like, have you ever heard this before? Like passive income and like doing this thing? And because, you know, at 22, you're
what did they say?
School.
What did they say?
And this is interesting because they were like, my dad was a working professional. He was in the military. He was an officer. My mom was a physical therapist. My dad has a master's degree and all this. So they're the epitome of, and I wouldn't say they're poor dad mentality because they've done okay. But I was telling these concepts.
They were frugal. They managed
very frugal.
Money. Yeah. Not
absolutely.
Typical American. Yeah.
Correct. Right. But they didn't have like tons of passive income coming. I said, have you heard of this before? And they said, well, in the military, you move around and they give you a housing allowance. And I'm like, yeah, sometimes you live on base. And if you don't live on base, they'll pay for your house payment basically. Right. So my dad said, we'd move around some places. And when you were born, Andy, I was born in Georgia. He was at Fort Benning, and it was a place called Columbus, Georgia. He said, we lived off base and we bought a little house on Parker Drive in Columbus, Georgia. And I'm like, oh, great. When we moved, we kept it. A property management company handled it for us. And, we made a few $100s a month above our payment. And then, and we moved around for a few years and then we sold it. And I said, when you sold it, did you make money? Like, yeah, we sold it for, $20,000 or $30,000 more than we paid for it. So I'm like, wait a second. So you had a house that the military was paying you to live in. Yeah. You moved and you had a property manager that even after everything net, you're making a couple $100s a month. Yeah. And then a few years later, you sold it and you made like 20 or 30,000. Yeah. I said, why did you sell it? And they were like, my mom, she's like, I don't know. And then she said, you know what? Actually, I think the roof was getting old and we needed to fix it or something. So we just, it's a hassle. And I'm like, what hassle? You're making all this money every month. But that was, so then we're having this conversation around Rich Dad Poor Dad, and they're like, oh yeah, actually maybe we, that wasn't a bad deal that we did that, it wasn't hilarious. A bad deal. Yeah.
That's hilarious. I was looking at the graphs just yesterday in the last 40 year, or I can't remember what the time frame was, real estate going up in value over the last 20 years or 30 years. I can't remember. It's gone up like 25, 30% in value just over that, period of time. And that includes like your 2008 values go down, values come back up. It's just really interesting with this whole concept of leverage and leveraging real estate. I remember my mom reading the book when I was a kid, and she's like, you got to read this. It was interesting, fascinating. They were already doing rental properties, but my mom's in the same situation. She liquidated a rental property to a wholesaler, a guy like you. Maybe you bought it.
Maybe I did.
Because she didn't want to deal with it. She's like,
do you want to buy it from me, Ryan?
For $3,000 more, maybe. But she got a postcard in the mail. Circling back to the marketing I did, like it was all the right timing. She got a postcard in the mail. I'm a real estate guy. She knows that. She gets a postcard in the mail on the day that she's pissed off at her tenants, they're moving out, the day she finds out that the roof needs to happen, on the day that who knows what else happened. And she was probably having a bad day that same day. And she got that postcard. She called the guy. He said, I'll give you cash tomorrow. She's like, I'll do it. She sold the freaking thing and didn't even call me or tell me anything about it. She let it go for 50 or 70,000 less than she probably could have gotten for it. But here's the point. And this is maybe something we should talk about with wholesaling. She was happy with it. She was glad to let it go. It was a win-win. And that's one thing that I think with wholesaling, a lot of people maybe get a bad rap for, where it's like, well, you're just taking advantage of people or whatever the case is. I remember I sold a property this last year. It was a family where they had to put grandpa in the rest home and they didn't have the money to do it. And he just got put in and they had payments that were coming up. And, but they had problems with the property and there was a loan and, all this type of stuff. And so I worked it all out. Then he ended up passing away. We had to go through probate. It was a mess. Anyway, they sent me thank you cards and everything else. I've still made money. They got what they wanted out of it. They write me Christmas letters every year saying I'm the greatest person ever. And the end buyer I gave it to ended up making a profit and everybody was happy with it. There's no question that they took a discount. The fact of the matter is I'm not really trying to hide that I want to make money. I think some wholesalers feel like they're kind of slimy. Oh, there's no way I'll ever, trying to mislead somebody as to, maybe the value. What's your thoughts on that? How do you keep the integrity in the wholesaling? How do you keep the integrity, but also work a wholesaling process? Any thoughts on that?
Yeah, totally. And wholesalers sometimes get a bad rap from that, from people that don't understand exactly what you do. But if you could hear about every situation that we're buying these houses in, you would recognize that the people are selling for their own reason, just like you said, Ryan. And it's not always for the most money. Because we all assume everyone's like us. We assume everyone thinks like us and is gonna process that information the same way we do. So you naturally assume, well, if somebody's got a house, they're gonna sell it and try to get the most money, right? Wrong. That's not true. Because what about timing? What about repairs? What about other family situations? You got to move. What if you don't live close to an area? There's so many different situations
Or
that
you
you can
inherit
like.
you inherit the house and it's free and clear and it needs work and there's family members all across the country. The motivation there,
Absolutely.
you know?
Absolutely. 4 family members not living in the state. Somebody passed away. The house needs work and the estate needs some cash right now. Are
And
you going to
taxes
sell at a
come due.
discount?
Taxes come due on top of all of it.
Yeah, I mean, you got all that stuff, and you think somebody comes in there and says, "Look, I'll handle it for you. I'll help you handle the paperwork. I'll get you cash you need today." Are they getting a discount for that? Yeah, but the people could know they're getting a discount. Say, "Look, but you're giving me less headache, all this timing, cash up front." Like, absolutely, right? So we look at it and say it's not a one size fits all box. You look at it and say, okay, there's property distress and seller distress. And if you go in there and can listen to what that seller's distress is, and you say, if I understand you right, Mr. Seller, here's what you're dealing with, right? Here's what's important to you. They say, yeah, if I could help you deal with what's important to you, any reason you wouldn't sell me the house at a value that makes sense to both of us? Sure. And you can go tell that person, look, I'm going to get you all those things you just said were important to you on the day that you want at this price. And they're like, that's fair for me, right? But you can get, somebody can say, the neighbor will come whisper in there, you can get more money. Yeah, if you had money to put into it, if you had time, if you had ability, and if you wanted to wait, 6 months and deal with all the other stuff. Or you can say, hit the easy button, Staples, it's easy,
Yeah.
right? And that's what it is. I mean, it's almost like the pawn shop, right? Pawn shop, people know they're not getting full value for stuff, right? But they're like, hey, you know what? It makes sense for me in my circumstances right now, right? Trade in a car, right? So.
Well, and everybody's bought convenience before. I use the example of the water bottle, right? Like I can go to Costco and buy a water bottle for a nickel, or I can go to 7-Eleven and spend $2 for a water bottle, or heaven forbid, I'm at a concert and I pay $5 for a freaking water bottle. That's the same water bottle I could have bought at Costco for a nickel, And so it's like, well, but I'm willing to pay for that. Well, why are you paying it? Why are you willing to pay $5? You got ripped off. Well, I didn't really get that ripped off because I was really thirsty. And it was
thirsty.
It was worth it.
Right. Absolutely.
Like, there's times where it's like, and I'm a frugal guy, you know what I mean? But there's times where I'm like, the $5 water bottle at the concert was worth every penny because I was going there for the experience and I wasn't going to nickel and dime everything. And I knew I was going to get hosed when I went to get a water bottle. And I'm not talking about a water bottle to fill up. I'm talking about something to drink, And then I, go to Costco and get a 87 pack for $5 that I paid $5 for just one, but I was willing to do that for the convenience of that. And I think that's the same mindset mentality that somebody that's willing to sell their home to a wholesaler or somebody like that is. It's solving other problems for me. It's solving the entertainment experience. It's solving my thirst at the moment when I have to leave and go to the store to 7-Eleven and drive back. I'm willing to go to 7-Eleven versus Costco because it's on my way to St. George that I'm going down with a family. So I'm willing to pay a couple extra bucks with that. So there's this whole convenience factor when it comes to wholesaling. Same with my mom's property. Somebody solved her freaking problem. And honestly, she was maybe just a little too embarrassed to talk to me about the situation and didn't want to. So they solved another problem. She didn't have to deal with me, which may have been a problem. I don't know if it was or wasn't. I'm in great touch with my mom, but I don't know what it
happens.
Was. Yeah,
it happens. And bottom line, if nobody's just tuning into this, wholesaling and everything in life, right? Other businesses and all this stuff, sales, all this stuff really boils down to you're trying to solve problems. This person in front of you, what problem do they have? If you can solve it, if they got a real estate problem that you're able to solve for them and give them what they need, that's it. You're solving problems for them.
Yeah. Real estate problem solvers. That's what we call it. So, let's go to a mistake. Biggest income hacker mistake. What's something that we can learn from?
We've been talking about wholesaling, but overall, the idea for success in life is make money, right? Try to make as much money as you possibly can, leverage as much as you can to make, not leverage as much as you can, but like other people's time, business, or you're increasing your abilities so that you can make more money there. Make money, have lower expenses than what you're making, right? And then you have a difference there. And then when you take that difference, you invest it in something, right? So I guess my biggest mistake, I would say, is investing in stuff that I don't know, or that I don't have, I don't have business in doing that, right? I can give you a few examples. Once back in the day, I mean, I think you did this too, right, Ryan? Investing in options, index options in the market. So that was something I didn't fully understand. I didn't understand the risks there. So I was taking that. But one that's even worse, so things I don't understand, right? Options was one thing I didn't fully understand. I've invested in multiple things too. Like anytime I've done something that's like outside of my normal investments, which is like rent and interest, Like I've bought a van to rent out, like on a Turo app. I've invested in, like, this was horrible, high yield investment programs. It was kind of a joke, but we did it anyway. And it was like, you can't be surprised that you lost your money there. I've invested in like inventory with a guy. Like I went partners when we bought some stuff. Every time I've done that, every time I've gone outside of my normal, they've never worked out well, ever, ever. Like, but all of them promised like greater returns than I was making the other one, right? And they never work out. They don't work out.
Well, and that doesn't mean there's not money to be had in those other avenues. It's where are you going to devote your time and become an expert in so that you can analyze that properly. I've got a buddy of mine that just called me that got into this investment that was paying like 50% return on his money annually. I won't go into a lot of detail on it, but then he found out that there's a major problem and he's worried he's even going to get his money back. And it's like, I'm in big trouble. The other problem is he got accustomed to getting some of that money. And now it's like, where am I going to find the same return? And it's like, you're not. It doesn't exist. Like you've got to understand, if it's too good to be true, it probably is too good to be true. But the allure, I can't remember who that the fictitious character that lures you in with her singing and everything. It's like, oh,
siren song,
yes,
siren
they
song,
drive the ship right into it. You know what I mean? That type of stuff happens quite a bit. I like this principle that you're talking about, though. There's this earned income, right? Like my number one goal is to have earned income. But I talk about it 2 times. I have 2 hats that I'm wearing, right? I've got my earned income hat. This is the money that puts food on the table. This is the money that takes care of my kids, pays for my house, that type of stuff. But in part of that earned income, I have to carve out some money for myself. This is my money. And that portion of my money then becomes my investing money. And then investing money turns into passive income. And then that passive income goes to pay for those expenses so I can start living. And that's the whole idea of this, getting out of the rat race, is getting that passive income. But it really starts with some foundation principles. I think a lot of people try and skip the earned income phase. And I don't care if you're wholesaling or fix and flipping or whatever, you're going to have a job. That job may just be, I see a lot of people get into wholesaling or fix and flipping, whatever the case is, trying to get out of a job, but create an even worse job with a boss they hate even worse, which is themselves, because they're not used to managing their time or anything else they have to do. So you're going to have a job, right? It's got to start there. Now, the question is, how can I have a job that's going to pay me the most amount of money, that I can leverage the most, that I can accelerate the most, that I can learn the most? Then the question is, how do I introduce some frugality into living on less than I make? And then how can I properly invest that money in things that I know or learn or do? I mean, we could be having this conversation with Andy, the options trader, because he, grew up in the option trading and knows everything about it. Like, there's money to be had in almost everything. But if you're not accustomed to what it is, you can find yourself in a big situation. Because if you know what it is, that's a problem. I can see that's a problem because I have experience in that marketplace. But I love this idea. I had a buddy that actually they stole 3 cars from Turo that they never recovered and had major issues with it. But anyway, it's funny that you talk about to bring up Turo. So any thoughts?
My Turo experience has been like yours too. Not that great.
Oh, serious?
No. But here's the thing, to summarize that too. It's like, if people talk about high returns, and there's a lot of high returns people talk about, right? A lot of times those returns are disproportionate because the person's putting their effort and their energy and their expertise onto that, right? If you are thinking, well, I don't have any extra effort or energy or no expertise here, yet I want to get those disproportionate returns, you're fooling yourself. You're not going to get it. And somebody that's got that is not going to pay you their same returns. If I can make 50% and I'm going to take your money, I'm not going to give you the 50%, right? That's my expertise giving that. So people think, like, oh, and I'll give it to this guy that has the expertise and he's going to pay me that. And that's a recipe for disaster. I mean, you just hear about that all the time. These people just taking other people's money. If you abdicate that responsibility and say, hey, I don't want to do this, you do it for me. Nope, not going to work out. Work out for you.
And I think a lot of people want to abdicate their finances. They just let somebody else deal with it. And I think that's a big mistake. You've got to be the CEO of your own financial future. You've got to be the CEO of your finances. You've got to be the CEO of increasing your value in the marketplace. You've got to be the CEO of increasing your passive income. Like, that's your job. There's nothing, this is nothing against financial advisors or anything else, but the bottom line is that's your job and you've got to own it and understand it.
Absolutely.
Let's talk about an income hacker success.
Oh, success. What do I mean, income hacker success? Overall, I would just say my success has come from trying, and this is an overall thing, but like, it's just that it's always been living on less than I make and investing the difference. It's not been sexy. It's not been this thing that like I sold the company and made $40 million. It's always been a little bit of the grind and a lot of sacrifice all along the way. My first property that I talked about at the beginning of this, call it my tree house, where I bought it, fixed it, rented it out, sold owner financing. At the end of that, it was about a 1.5, 2-year period. At the end of that 2-year period, I got all of the cash from selling it. And it was $40,000. And for a 23-year-old kid, I mean, I'd never sniffed that much money in my whole life. So $40,000, well, what do you do with it now at that point, right? It must have been ingrained in me somewhere, somehow, because at $40,000, I didn't move out of my house into a nicer house. I lived with my parents. I didn't move out. I didn't buy a nicer car. I didn't buy a motorcycle. I didn't go on some lavish vacation. I took $5,000. I put it as a down payment on a rental property. And I took $35,000 and loaned it to a guy who I knew and trusted in a first position against real estate, probably at a 12 to 15% return. So I traded that cash for, not for excitement or whatever, for rent and interest. Mm-hmm. And then I just kept going, right? So I think that mentality of like, hey, I'm going to sacrifice now for what I want later. I'm going to grind that, have the income, the higher income and the lower expense I do, that bigger gap that I can drive forward is going to that sacrifice is going to give me disproportionate freedom earlier in life. And that's what I always wanted.
Yeah, I love it. I love it. Well, and I think your family was that way as well. I remember you telling me the stories of your dad, packing lunch when you guys did road trips rather than going to eat out, saying, hey, we're going to do this. And it wasn't like they couldn't afford to, your dad, both great working professionals, and your mom, they could have afforded to go out to eat, but they chose not to. It was I would rather sacrifice this and put money in other places than I would, and sometimes it makes sense to go out to eat and other times it probably makes sense not to. And understanding that element for you personally, where that is, I think is really important. So let's talk about legacy. Andy, what are you doing to teach these principles to your kids? I know you've got 4 amazing kids. I personally know them, but what are you doing to teach these things to your kids?
Man, I've sat down. My oldest son, he just turned 11. He's read Rich Dad, Poor Dad. And they all come different. Each of your kids come different. So what they're going to absorb and what they're going to do is different, right? He happens to be the one that this stuff clicks for. He's read Rich Dad, Poor Dad. And him specifically, and my older kids, I gave them opportunities to invest in loans because I do private money loans for people against real estate. And we get an interest rate for that. And I say, hey, do you want to participate in this loan? And he and my older daughter wanted to, right? And I remember did a loan, paid off in like 6 months. So I sat him down in this proud dad moment, right? I'm like, okay, here's your principal, count it all out. Remember how much it was? Now here's your interest. And I'm giving him the interest. Now my son had more money admittedly than my daughter, right? So his interest, and it wasn't like astronomical. It was like $3 or $4, something like that. Yeah. Now my daughter had a super small amount of money. And it might've been, it was super anticlimactic for her. I told her, like, here it is. And it was like 10 cents. Oh. She put in like $3 or something like that, right? And she goes, so it may have like jaded her for life. My son, it clicked and he's like interested in this, like interest, wow. And my daughter was like, she literally said that she's just like, for this? Yeah. I waited for this. And anyway, she hasn't wanted to do a loan since she was younger. But so giving opportunities to invest in that, see how that works. And I talk to them all the time, just in casual conversation. We're talking as a family, I'll talk about, rent. We'll drive by houses and say, well, here, we have the tenants and here's what we're doing. And here's why we bought this. And they're paying rent and interest and how interest works. Either works for you or against you, right? So it's not like we're sitting down and giving them a 3-hour seminar every day. It's just in the midst of life, we talk about we can do these things because, rent and interest don't sleep, So, that's what we're doing. It's ingrained in them.
Yeah, I love it. I think a lot of people, religion and finances are like taboo subjects to talk about, and I think that is wrong. For us, we're in the same type of situation. Our kids are similar ages, but for me, I'm really open with my kids. They know my net worth. They know what I have. I basically have said, I will share anything with you if you don't share it with other people. Meaning like personal information. So like they want to know stuff. And so just even yesterday we were in the car, I can't remember what they were asking me, but my oldest is like, Dad, I've never told anybody your net worth. You know what I mean? Like that's our little secret, type stuff. Yeah. And because of that, I share more and more and more with him. But I think sharing finances, struggles and successes, problems are good and healthy because our kids are going to be dealing with that stuff as they move through life as well. And what better place than for them to see good and bad examples from each of us and the consequences of those choices before they have to start making them themselves.
Yeah. No, that's awesome. And I think, I thought about, would I share it with my kids? I think if my kids got to a stage where they actually could ask the intelligent question, I would give them the answer. Yeah. Like the net worth, I'm thinking like, wow. But yeah, I would. That's a great idea. But I'm pretty open.
I had to figure it
Super open
out.
with
So like, I'm
numbers.
like, I don't really know. That's a bad thing. I should know this number, so I got to do all that. But anyway, it was a good thing for both of us. So, well, Andy,
That's great.
let's wrap things up here. What would you say your why is?
Oh goodness, this is the elusive why, the ever-changing elusive why, right? Everybody wants to know. You know what? This isn't going to be super deep, but when I was always, I think from a young age, now I've always just wanted freedom. I never knew what I wanted to be when I grew up. I always wanted freedom to do what I wanted to do with who I wanted to do it with. So I think that's always been this overarching thing for me. I just want to be able to just kind of control my own destiny. But I think more recently now, of course, freedom's always been an underlying principle for me. But to be able to be in a situation where you can help people, that's it, right? My family certainly, but others too, like anybody, those people that I cross on the street that I don't know, give them my time, expertise, whatever I can give them, just give them a smile. But that's it. So I think freedom and being able to help people and just always trying to become a better human being, increase in my love for others around me, right? So how's that for a complicated why?
It's fantastic. No, I love it. What's your favorite book?
Oh, my favorite book?
Sure.
I love the Book of Mormon. I read the Book of Mormon like multiple times per year. That's one of my favorite books. Inspirational, amazing principles in there, and just it's the best right now. If you're talking business books, depends on the category of business books that you're talking about. I know from an income standpoint, there's a book. I have a hard time with favorites. My wife knows this, right?
Yeah.
But there's a book that's just coming to my mind right now. The old Jimmy Napier book. He passed away recently. He's an old classic financial guru guy. But Invest in Debt. Invest in Debt. Such an interesting book. It's a short read. Talks about financial calculators. Teaches you how to use one. Teaches you about the power of compound interest, but in a fun kind of folksy way. He was from the South in Florida, and kind of you can hear his voice kind of as you're reading it along. So Invest in Debt. It's a classic, right? It's a classic.
Love it. Thank you. Favorite app?
Favorite app? Ooh. One I use heavily, communication app. Communication's huge when you're talking with different people in companies that I work with. Voxer in team communication, right? Multiple different groups and stuff, and use that frequently. It's powerful. Voxer.
So if you had all day, money was no object, no obligations, you could do anything, money was no object, what would you do?
You know what? I would be outside, sit outside doing something with people that I love, having good conversation. My best moments are when, and sometimes if there's food involved, right? But sitting outside in a comfortable setting with people that are just good people that just add to you and having good conversation. Now, if we're watching a baseball game or if we're doing other stuff too, that's great. But just that environment's just like, that's it. Stop time, freeze time. This is it for me. That's
awesome. Andy, I know you've got Flip Hacker Live coming up here. Let's talk about that. What do you got going on? What are you guys going to be doing?
Yeah, Flip Hacking Live is an event we've done. This will be our 5th year running here. We do it every October for 5 years. This year is going to be a little bit different. We had to do it as a virtual event. Now I know people might look at that and say, oh, virtual event, that's crazy. It's going to be like no virtual event you've ever seen. This is not going to be just some Zoom call meeting or something. It's going to be phenomenal. I promise you that. But for the last 4 years, it's just, we bring on successful people around real estate for the most part, right? Talking about everything from lead generation, if you're interested in that, to hacks for flipping, because Flip Hacking Live, flipping properties, how to run a team, how to do this like virtual wholesaling, how to raise money, how to do personal finances stuff, just everything in between. And sometimes we'll bring in, there's some guys in there like former NBA players, or like guys like Jocko Willink was there last year. He wrote a couple different books, and a lot of people know who he is. But phenomenal, awesome, like live event. This year it's going to be live, just live virtual, right?
Yeah.
And every year I'm looking forward to it. And this year, I always like, what am I going to say, right? Because they have me speak every year. And this year, I turned 40 this year. So I've been really thinking like people think about like when they're 40, this midlife crisis and like, those existential questions and stuff. So I've got some stuff I'm going to share this year that I've never shared before from stage, or really with anybody, right? That I don't share this stuff. I think I'm going to get personal and deep and share like really this journey that I've been on to freedom, financial freedom, and the hacks and stuff that I've used that, not common knowledge and definitely not common practice. So that's what I'm going to share. That's what I'm going to be sharing this year.
Well, and it's a great community. I've been to one of those, a couple of those events with you, and it's a great community, great people. Really, I don't know if I want to say family is the right word, but similar mindsets, right? Where it's like, hey, you find you find home there, right? Like these are
Yeah.
people I belong with. Any thoughts on that?
Yeah, absolutely. That's what it is. I mean, this is like when you come in here, these events, this is not like us and you. This is like everybody, right? It's
Yeah.
like, bringing it together, and we're trying to share the best we possibly can, recognize that 1 + 1 can be 10. So that's what we're trying to do. Just give our best because it's not going to hurt us.
It's awesome.
Yeah. So family, Flip Hacking Live, fliphackinglive.com. That's
I was going to say,
find it.
if somebody's interested, that's the website to go to.
Yeah, fliphackinglive.com. And this year it's going to be, it's going to have a broader reach than it's ever had before, because formerly, going in person is phenomenal, right? There's just a different feel that's in the room and stuff. But you also have to carve out time, which is our most precious asset, right? You got to carve out time, and it's money to fly somewhere, and it's putting yourself in a hotel and all that stuff. But this way you can, in the comfort of your own home, you can go to a super dynamic, cool presentation or multiple day presentation, and we're going to bring it. We're going to bring it to people. So it's going to be awesome.
Andy, any final words for our income hackers? Anything you want to leave with them? Somebody that's on this journey, getting started on it. Any final thoughts?
I'm no different than you are. I promise you that. Ryan knows that. He's known me for years. I'm absolutely no different. I'm not a guy that was born with a silver spoon in my mouth. This is just if I can do it, you can do it. I promise you that. And the same thing with Ryan. I can vouch for Ryan. He's an honest guy, genuine guy. I've known him for years. He has struggles. He has successes. But if he can do it too, you guys can do it. So.
Love it. Thanks, Andy. Thanks for being on Income Hacker. Appreciate you being here.
No problem. Glad to be here.
If you got value out of our discussion today, please subscribe, rate, and review the podcast. It's a big help to me. Also, please share with a friend. Nothing is more valuable than creating financial friends who are like-minded. You can do that by inviting them to listen to the Income Hacker podcast. Bye for now, and make it a very profitable day.
Income Hacker may receive payment on the show from sponsors and guests in the form of books, giveaway items, discounts, or other remunerations. This show is for entertainment purposes only, and before making any financial moves, consult with a professional who can intimately understand your personal situation.